Hello, my name is Jay. I'm with Bite Size Coins, and I have an article to review with you today. Today, we are looking at finbolt.com. We'll just go ahead and get into it. Study: 33% of Americans own crypto, 46% plan to buy in the next year. A new survey indicates that there is an increasing adoption of digital assets among Americans. The study of Piplsay, backed by MarketCube, found that 33% of Americans own at least one type of cryptocurrency, with almost half of all millennials polled owning some type of cryptocurrency compared to over a third of Gen Xers and 13% of Gen Zers. Furthermore, almost half of the respondents are keen on purchasing services or products using cryptocurrency, with millennials leading the pack in terms of adoption once more. Moreover, 46% of Americans plan to buy crypto in the next year. However, 21% are looking to sell, while the rest prefer to stick with their current positions. And we'll go over this in just a second. I'm just going to go ahead and read the rest of the article before we get to it. It's not very long. The vast majority of respondents perceive cryptocurrency as a somewhat risky asset, citing factors such as lack of system knowledge, lack of regulations, volatility, and fear of fraudulent activities. Notably, more than 2 out of 3 Americans polled say they are somewhat or very familiar with cryptocurrency. Of those familiar, over 40% believe that the primary goal of crypto is to replace currencies, while more than 30% think that cryptocurrency is a store of value. Additionally, the research found that 88% of respondents who invest in cryptocurrency are those with a college or master's degree. The Piplsay survey was conducted nationwide in the U.S. in May 2021. They received 5,061 online respondents from individuals age 18 and older. All right, that's the end of the article. Let's go ahead and talk about the author, Domas Lukosevicius. I don't know if that's, again, pronunciation, not my strong suit. Domas is a National Economics Olympics participant who is incredibly interested in finance, digital assets, and economics. He's an avid reader of investment books. At finbolt.com, he writes about stocks and gives in-depth overview of markets for the readers. All right, now let's go back up here where we skipped over. This is the little survey that they gave, and it's sort of, what do they call it, infogram, I believe. Okay, so the great crypto rush. How familiar are you with cryptocurrencies? 35% said very familiar. Now you got to wonder if that's true. Are they really familiar with it? And what constitutes very familiar? Who knows? Do they understand how it works, or have they just heard it a bunch of times? 34% somewhat familiar and 31% not familiar. So that's a pretty even split. That's almost thirds right there. If familiar, then what do you think will be the primary goal of cryptocurrencies in the future? It looks like 42% of the people say it's to replace currencies altogether. We don't know that for sure. That's a possibility. It certainly is. Especially if you start seeing digital coins or digital currency issued from the government, like the central bank or the Bank of China, that sort of things. Store of value, 33%, and replace traditional commodities, 25%. Do you currently own cryptocurrencies? 67% said no. 33% said yes. That's interesting. It's sort of a market share, right? You know that 67% don't, and 33% do. And how likely are you to purchase products or services using cryptocurrencies? 47% very likely. So these must be these 33% here who are saying that, I guess. And 36% not likely, and 17% somewhat likely. So about half. Half people think that they would purchase products or services with cryptocurrencies. All right. In the next year, do you plan on buying or selling cryptocurrencies? 35% buy a little. 33% neither buy or sell. 12% sell a little. 11% buy a lot, and 9% sell a lot. How do you perceive the riskiness of cryptocurrency? Well, it looks like over half says it's very risky, and it's true, it is risky. It's pretty risky. The upside, of course, makes it worth a lot of that risk, I think, personally. But that's, each individual is going to be that way. 28% somewhat risky, and 90% not risky. Which of the following factors contributes the most to making cryptocurrency risky? Lack of system knowledge, 21%. So they don't understand it, so they don't know. 90% of volatility of cryptocurrencies. Yes, they are very volatile, much more so than most standard assets. 10% trust factor, peer-to-peer. 6% not sure. They just don't know. 20% lack of regulations. Okay, I guess I could get that. 17% fear of fraudulent activities. I definitely get that. 7% fear of government regulations. Ooh, look at that. I think I would probably be in this right here. This category is me. This is my category. I would say somewhat risky, and I would say fear of government regulations. That doesn't prevent me from investing in the space because I think that the upside is worth the risk. But, you know, that's where it is. These are probably fairly average people. Now, granted, it was only, what, 5,000, I think they said? Yeah, 5,061 were online responses. Plus, people that are online probably have a tendency to be more comfortable with technology than, you know, if they pulled a bunch of retirees, I don't think these numbers would probably be the same. However, it is important to note. The buying here, right? 35% says they'll buy a little within the next year. These people say they're not going to buy or sell. Who knows if these are the people that owned a bunch or they just answered that. Sell a little bit, okay, 12%, and 11% buy a lot. So between these two numbers, that's pretty good. You're getting close to, well, let's see, we got 46%. That's almost half, right? Okay, now you have the standard everyday American. About 50% of those people polled think that they're going to be buying within the next year. Not only that, but you're just now starting to see widespread adoption, you know, in the banking system. ETFs. You got the hedge funds are interested in it. Oops, sorry about that. Hit the button. Hedge funds are interested in these things. I think you're going to see a lot of people buying cryptocurrency. Unless something very traumatic happens within the market within the next year, you're probably going to see a lot of people. You got to keep in mind that a lot of these people here, America's not in a stellar economy right now, right? There's a lot of people hurting. There's also a lot of people who are looking to get away from inflation that pretty much everybody knows is coming. Well, all right, maybe not everybody, but a lot of people know that's coming. And this can definitely be a hedge against inflation for a lot of people. So between those two things, I think that we have a pretty bright future. You know, we could listen to Elon Musk or Ray Dalio or all these other people who, you know, we hang on their every word, but this is a snapshot of what everyday Americans are thinking, right? And for me, this is probably much more important than what Elon Musk says. Why? Well, because these are the people who are putting in the nickels and dimes are the important parts of a market, much more so than I think than the big players and the whales. Now, the whales could hurt things if they really wanted to, but the everyday American, if they start buying into this, if banks start offering this as something that is a viable option for people to put their money into, either as a risky investment or a regular stable one if things start to stabilize, then you're going to start to see probably mass adoption a lot sooner than we thought. I mean, it's already moved pretty quickly, but I think within the next year you're going to see, if these people do stay, if something catastrophic doesn't happen, and these people feel as comfortable as they feel now to buy within the next year, 35% buy a little, 11% buy a lot. Between those two, you have almost half. Now, I don't know if this is the everyday person anymore. You know what I mean? It depends on who filled out these surveys. But if it is a snapshot, then you're going to see a lot of people start to buy into crypto, which means good things for you. Now, they didn't break it down by coins or anything like that, probably because some of these people, all they know of cryptocurrency is maybe 1, 2, or 3 different coins. You know, with the DeFi space and the NFT space and all these level 3 blockchain improvements coming along and down the pike, I think you're going to see a lot more mass adoption. I think it's extremely good for the market, and I think things are looking on the up and up. Just hang in there, traders. Trust me. I'm a holder. I'm not a trader. I hold. I buy and I hold. I find a company I like. I put money into it. I let it sit and I watch it. Either I stake it, I put it in a liquidity pool, or if it's something that I can't do either of those things with, I just hold it. So that's my philosophy on things, because I know, or at least in my in my personal opinion, in my brain, the way my logic works, I think that this is only going to rise over time. Now, it might not be right away, it might not be a year or two, it might be a decade before we see another big boom from, 15K to 60K or nearabouts. But I think eventually that's going to happen. And I think you probably want to be on that gravy train when that begins to happen. Now, I've also, I've done really well, and then I lost quite a bit in this last crash, but it doesn't matter to me because I'm looking 10, 15, 20 years down the line. That's why I am holding for. So I hope you found this interesting as I did. I am Jay from Bite Size Coin, and that is your crypto news for the day. Thanks.